Hello guys, welcome back to my channel. In today's video I will break down the top down analysis of my trade that I took on Friday 12 September 2025. So basically this was the trade 1:2 risk to reward ratio, and this was on EURUSD. So let me show you the before picture that I posted on my Twitter account. So this was the picture. Sorry, this was the screenshot that I posted. I paid attention to this 4-hour FEG, the extreme FEG, and this FEG. This was overlapping with the 1-hour breaker box, so I also pointed attention to this FEG, and I was expecting a bullish move to this buy side liquidity. Now let's look at the high time frame analysis. So this was the daily time frame. This was the daily time frame. Price respected the FEG and order block, and then automatically our target becomes ERL. So as you know that price move from external to internal, internal to external. Internal is in the form of FEG, order block, or internal swing that is most of the time called inducement, and then we target the external, which is in the form of main swing like higher high or lower low. So price move from internal to external. So price released to the downside to take out the internal liquidity. This was the internal liquidity in the form of FEG, and this was the order block. Price step into the order block, and then our target become external liquidity. So this was the daily time frame, and this was the 4-hour. I marked these two FEGs. This was overlapping with the 1-hour breaker block, and this was the extreme FEG. So I was expecting a bullish move from these two zone to this to take out this previous day high and buy side liquidity. So if you look at 4-hour, this was the breaker block. Price first take out the sell side liquidity and then the buy side liquidity. So whenever price take out buy side and sell side, then this the candle become your breaker block. Sorry. So this become your breaker block, which was overlapping with FEG 4-hour and 1-hour FEG. So this become your strong zone from where you can expect a buy move or a move. So these were the two zones that I for which I waited for price to come into this zone and give me a clear model in 15 minutes. So if you look at 15 minutes, basically I most of the time I trade London session, but sometime I also trade New York session. So in London session I wait for two things. First, to take out the low or high of the Asian session, and then I wait for a price. If I am bullish, I will wait for a price. Let me explain it a bit. Let's say this is the Asian session. So if I am bullish, like my target is bias is bullish, in this case my target was this buy side liquidity. So in this scenario I was bullish. If I am bullish, let's say my target is this swing. So I will wait for a price midnight open. Midnight open is after the Asian session. So I will wait for the Asian session to be closed, and then I will wait for the midnight open. Basically let's say this is the midnight open, and then I will wait for a price to trade below the midnight open and take out the Asian low, and then give me a clear CISD with FEG, and then I will target the high. So let's say price take out this Asian before the London or in the London session. Price created this manipulation, and then this is the midnight open. Let's say I will wait for a price to trade below the midnight open if I am bullish, and then I will enter on FEG or IFEG, and then I will target the high. So this is basically my entry model. The opposite is also true. If I am bearish, I will wait for a price to take out the Asian high. Let's say this is Asian high liquidity, and price take out the Asian high before the London or in the London session, like this. This is your midnight open. For example, price traded above the midnight open and take out the Asian high in the London session, and then I will target the low. So let's say this is your midnight. I will show you the both example, bearish and bullish. Bearish was on USD JPY and bullish was on Euro USD. I will show you the both example. So this was midnight open, price created CISD, and then your entry is at the FEG or IFEG, and then target the loss. I will show you the both example, don't worry. This was the bullish example, this was my PY, and this was my target. So I was bullish, and in this scenario I will wait for a price to trade below the midnight open. This was the midnight open, as you can see, 12 a.m. Friday. Basically I use UTC -4, and I use this indicator ICT midnight and 8:30 open. Basically 8:30 is used for New York and midnight is used for London session. So I will wait to trade London session. I will wait for a price to trade below the midnight. This was midnight. Price dump to the downside, take out the Asian low, manipulate the Asian low, created manipulation, and then release to the upside, give me a clear CISD, and then with 2 FEG. The one is this one, and then the other is this one. So this was the expansion move, and then the Judah swing. Basically Judah swing is the swing that is created a fake swing, a fake move before the real move is created before the London and New York session. As in this scenario, you can see price created a Judah swing. From this is the Judah swing before the New York session, and then give a real move to the downside. And same in this scenario, price created a Judah swing. This was the Judah swing, and then give a real move from this FEG. I place my order this FEG at this FEG, and then this, and then target the high. So this was the 1:2 our risk to reward ratio. And if you look at here, this was our another PY before New York session. Price created a Judah swing and then give a move to the downside, because this was our PY from where we were expecting a bullish move. And then price created a give a real distribution also in the New York session. So I didn't enter into this trade because there was less confirmation like CISD and FEG. If you look at here, price didn't create a FEG. There is no FEG, and that's why I didn't enter into this trade. So this was the first trade, London session trade. And let's now look at the bearish example. This was the bearish trade that I took. Price give a move of around 1:2 risk to reward ratio, and then hit my around 80% of target, and then took me out at break even. So now let's look at this example. I pointed attention to this for our order block on my Twitter account, and my target was this ERL. So I don't know why price didn't achieve this target. Maybe the reason is this, that price there was a strong FEG and I didn't take this in notice. So this was the reason, because this was a strong FEG that price created. So now let's look at the 15-minute. As I have told you that if I am bearish, right, I will wait for a price to trade above the midnight open. So I waited for a price to trade above the midnight open. This was the midnight open. Price traded above the midnight open and created a manipulation stage and took out the Asian high, printed a CISD here with FEG. This was the FEG, right? So, and this was your FEG. If there is FEG, I would prefer to place your order at FEG. If there is no IFEG, then you can place your order at FEG. But if there is IFEG, I would recommend to place your order at IFEG because IFEG is strong. I believe that IFEG is stronger than FEG. This is my personal experience. So I place my order at IFEG and then target this loss. Price hit around more than 1:2 and then took me out at break even. So these were the two that I took on Friday. I hope this would help you a lot. And if this basically, if you don't know my entry model or you want to study my entry model in detail, you can download the free ebook from the description below. Thanks for watching. See you in the next one.